The financial turmoil that has gripped global markets and the banking sector in recent years has left many investors and strategists wondering how we got to this point. Despite UBS Bank's recent agreement to take over Credit Suisse and Credit Suisse receiving a $54 billion bailout from the Swiss central bank, the belief is that the turmoil in the global financial markets and the banking sector still has much more room to run. One of the main reasons for this belief is the fact that the global financial system is still heavily indebted. In fact, the world has never been as indebted as it is today, and no country in world history has ever been as far in debt as the United States, as a percentage of GDP. This debt burden creates a great deal of risk in the financial system, and as such, it is likely that we will see continued instability in the banking sector and financial markets until this debt is addressed. Another reason for the ongoing instability in the banking sector is the fact that the global economy is still in a state of flux. Economic growth remains weak in many parts of the world, and this has put pressure on the banking sector, which relies on healthy economic conditions to thrive. As a result, we are likely to see continued turbulence in the banking sector and financial markets until the global economy stabilizes and begins to grow again. In addition to these factors, there are also a number of other structural issues that are contributing to the ongoing instability in the banking sector. For example, many banks are still struggling to recover from the aftermath of the 2008 financial crisis, which left many of them with significant losses and weakened balance sheets. This has made it more difficult for banks to lend money, which in turn has slowed economic growth and contributed to ongoing instability in the banking sector. Another structural issue that is contributing to instability in the banking sector is the rise of new technologies and new business models. The rise of fintech companies, for example, has disrupted traditional banking models, and this has put pressure on established banks to adapt and compete in new ways. This has created a great deal of uncertainty and volatility in the banking sector, as banks try to find new ways to remain relevant and competitive in a rapidly changing landscape. Despite these challenges, there are some reasons for optimism about the future of the banking sector. For example, many banks have made significant strides in recent years to strengthen their balance sheets and improve their risk management practices. This has helped to reduce the likelihood of another financial crisis and has made the banking sector more resilient in the face of ongoing economic and technological disruption. In addition, governments and central banks around the world are taking steps to address some of the structural issues that are contributing to ongoing instability in the banking sector. For example, regulators are working to develop new rules and regulations that will make the banking sector more stable and secure. Central banks are also taking steps to provide more support to banks during times of crisis and to ensure that the financial system is well capitalized and able to withstand shocks. Raoul Pal, an economist and CEO of Global Macro Investor, has been closely following the recent turmoil in the banking sector and the ongoing surge in the crypto market. In a recent hour-long interview with Anthony Pompliano, he shared his insights on the situation and provided his perspective on where things are headed. Pal began by discussing how the banking system reached this point. He believes that the current banking crisis is not a new phenomenon, but rather the result of a long-standing issue with the financial system. According to Pal, the financial system has been designed to create money out of thin air, which has led to a never-ending cycle of debt creation and inflation. He also noted that this system has resulted in the widening gap between the rich and poor and has caused significant economic imbalances. Pal believes that the central banks and governments have been propping up the financial system for decades, and the recent crisis is a culmination of years of mismanagement and neglect. He also believes that the current economic system is unsustainable and will eventually collapse, leading to significant changes in the financial landscape. When it comes to the crypto market, Pal is bullish on Bitcoin and believes that it has the potential to become a global reserve asset. He sees Bitcoin as a hedge against the current financial system and believes that it offers a more stable and secure store of value than traditional assets. Powell also pointed out that the recent surge in the crypto market is not a speculative bubble, but rather a result of the growing adoption of cryptocurrencies as a legitimate asset class. He believes that the current market capitalization of cryptocurrencies is just a fraction of what it will be in the future, and that investors should consider adding cryptocurrencies to their portfolios as a hedge against inflation and economic instability. Raoul Pal believes that the banking industry has become too political, and that this political influence is leading to an oligopoly in the industry. This trend towards oligopoly is driving out medium and small players who cannot compete with the larger, more established banks. Pal believes that this trend will continue, leading to a banking system that is dominated by a few large players, with little room for competition. Powell's concerns about the banking industry stem from his observations about the state of the global economy. In his view, the global economy is in a state of crisis, with record levels of debt and a financial system that is struggling to cope with the challenges of the current economic environment. According to Powell, the current economic crisis is largely the result of political intervention in the financial system. Powell believes that the political influence on the financial system has created a situation where the largest banks have become too powerful and are able to influence policy decisions in their favor. This has led to a situation where smaller and medium-sized banks are being squeezed out of the industry as they struggle to compete with the larger players. In Powell's view, this trend towards oligopoly is creating a situation where the banking industry is increasingly out of touch with the needs of the broader economy. He believes that the banking industry needs to be more responsive to the needs of small businesses and consumers, and that this can only happen if there is greater competition in the industry. Powell sees the crypto market as a potential solution to the problems facing the banking industry. He believes that cryptocurrencies offer a way for small businesses and consumers to bypass the traditional banking system and to access financial services directly. This could help to create a more diverse and competitive financial system, which would be more responsive to the needs of the broader economy. Powell is particularly bullish on Bitcoin, which he sees as a store of value that can be used as a hedge against inflation. He believes that Bitcoin will continue to grow in value, and that it will eventually become a mainstream asset class. He also believes that other cryptocurrencies will continue to emerge, and that they will create a more diverse and competitive financial system. Despite his bullish outlook on the crypto market, Powell acknowledges that there are still risks associated with investing in cryptocurrencies. He notes that the market is still relatively new, and that it is subject to a high degree of volatility. He also acknowledges that there are still regulatory risks associated with investing in cryptocurrencies, as regulators around the world are still grappling with how to regulate this new asset class. Despite these risks, Powell remains optimistic about the future of the crypto market. He believes that the market will continue to grow and mature, and that it will eventually become a mainstream asset class. He also believes that the market will continue to be a source of innovation, as entrepreneurs and developers continue to explore new applications for blockchain technology. In conclusion, Raoul Pal believes that the banking industry has become too political and is heading towards an oligopoly, leading to the exclusion of medium and small players. He sees the crypto market as a potential solution to the problems facing the banking industry, and he is particularly bullish on Bitcoin as a store of value and a hedge against inflation. While he acknowledges that there are still risks associated with investing in cryptocurrencies, he remains optimistic about the future of the market and believes that it will continue to grow and mature over time.